Hello, my name is Valencia Martin. I am with Remax Select. And just to give you a little bit about myself, I'm a real estate professional with Remax Select, which is a franchise office located in Oviedo, Florida, a suburb right outside of Orlando. And I specialize in helping clients buy and sell residential real estate. My brokerage firm, Remax, is a global real estate network of more than 100,000 sales professionals in over 90 countries. And since its establishment in 1973, more people turn to the Remax brand when buying or selling their homes. My guest alongside me is Santiago Gonzalez, Santi for short, who is the principal of the Gonzalez Insurance Group, which is also located in Oviedo, Florida. And what a lot of clients do not realize is that we real estate agents really rely on a number of professionals, including insurance professionals, to make sure that our clients' transactions go smoothly and that their assets like their homes, their cars, and their incomes are protected. So Santi, before I introduce you and your company, I just want to stop for a moment and say thank you for doing this web event. And I want to tell our audience how you and I met. That cool?
Go ahead, not a problem.
Okay. We're on a little bit of a delay, so if it looks funny, that's what's going on. One of the mortgage companies in the area, which is the mortgage firm in Altamont Springs, hosted a training for realtors, and you and your wife, Janet, were there. And you gave us some very valuable education on home insurance. Much like what you'll be sharing with us today. And because I had never had the experience of having an insurance agency to be so caring and passionate about educating their clients, I knew from that day that I wanted to partner with you and Janet and bring my clients under your umbrella. So I just wanted to share that with you and say thank you, and Janet and your entire team.
Well, we certainly do appreciate it. And it is about educating everybody. That's the main thing. Is we all want the same end result. We want you to make your sale, but we want to properly protect your client, who then hopefully becomes our client.
All right. So let's start with Santi, just introducing yourself, how you got started in insurance, and tell us about the Gonzalez Insurance Group.
Certainly. Well, I got started in insurance in 1986, a long time ago now. I started off as a claims adjuster, basically handling bodily injury claims for accidents, automobile accidents, handling physical damages to assessing the damages to cars. Then I moved on over to do home assessments, where unfortunately people's houses have been damaged by a storm, a fire, water pipe leaks, things of that sort. So I've been on that front line there when that client needed that help from the insurance company. And I've been able to take that experience, and in 2006, my wife and I got started with the Gonzalez Insurance Group, which is an independent insurance agency. I've taken that experience from the adjuster side and brought it over to this side and helping to advise our clients as to why they might need this coverage and why they might not need that other coverage. Since I was on that front line handing out that claims check, and there were times that I felt horrible because I knew the check that I was handing to them was not enough to cover their damages, but unfortunately I was limited by the policy that had been written by the agent. So my wife said, stop stressing about this kind of stuff, start getting in front of it, and start protecting these people as quickly as possible. So we did. In 2006, we started up our agency, and now we are totally independent. We have 15 homeowners insurance companies, 10 auto insurance companies, and then 21 life insurance companies that we represent. We feel by representing all of these companies, we give our clients multiple options to choose from, because not every one policy fits every one client. What's good for your neighbor may not necessarily be good for you.
Right. And I think that's an important point you made, Santi, because a lot of times when we're dealing with car insurance or home insurance, we'll look over to our neighbor or to our coworker and we're like, hey, what do you use? Oh, well, and that's one of the things that I really liked about you and Jan is that you guys took a different approach. You guys educate people. I mean, just in the few months that I've known you guys, I mean, I've learned so much for my own business. So yeah, I could truly relate to that.
That's what we're trying to do. I mean, we know that most time people hear insurance, the only thing they know about is I've got full coverage and this is how much I pay. And that's 95% of all the people out there. And that's not a problem. My thing is, we like to take that extra 5 or 10 minutes and explain the coverages to them and explain what those coverages are for and why they need certain limits. And I know that when they walk out of my office 5 minutes later, they're going to forget everything we talked about. But the key here is they know that I know, that we know, and all that we are is just a phone call, an email away, and we can respond to their questions before they call the insurance company asking them this question, which may start a claim. And now all of a sudden, the next thing they know, their premium went higher because they lost the claims free discount just because they called in to ask a question and a claim was set up and then the claim was closed with zero payment. So we say,
Wow.
call us, let us talk about it.
Okay, and we'll definitely get all your contact information. So if someone wants to contact you directly, either through phone, email, or whatever, they have that option. Today, our topic is 10 things that may affect your home insurance. So, Santi, if you don't mind, I wanted to start out with some startling statistics from that I garnered from the Insurance Information Institute, and you can add to it or clarify it if you wish to. I have 4 statistics that I just wanted to share with you just from a consumer's point of view, just looking on their website. The first statistic says that the average homeowner's insurance premium rose by 5.6% in 2012, following a 7% increase in 2011. And that's according to a February 2015 study by the National Association of Insurance Commissioners. It also said that Florida had the highest average homeowners insurance premium in 2012. The average was $2,084 a year, while Idaho had the lowest of $538. In 2013, 4.8% of insured homes had a claim. Property damage, including theft, accounted for 97% of those claims. Do you have anything to say about that?
Well, let me start off with the premium increase percentages. If I'm correct, I believe that percentage is nationwide. Here in Florida, our Governor Scott advised us about 3 years ago as Floridians to start expecting an average of a 10% increase annually on your home and auto insurance policies. So we are definitely on the higher end, but then you're also going to have states like Idaho that are on the lower end and bringing that national percentage down to about 5%. So if we start all planning to roughly have about a 10% increase annually, expecting that on home and auto insurance, we are pretty much in the ballpark. If you see increases in the 15 percentile or greater, I would tell you that definitely it's time to start shopping your policies. If you're down into the 5% or less, good for you. And we do have some of our carriers that are very conservative in terms of their rates, very stable in terms of their rates. But then we also have others that are very volatile. So again, it's an average. It's more of a guideline as opposed to written in stone.
Okay, and that's why it's neat to have you that could exactly, your insurers, and you could match those insurers with that particular client.
Correct. And going back to Florida, why we're on the higher end, if you look, we are on a peninsula and we are here with a lot of coastline and we are susceptible to hurricanes. And lately, we've been having some sinkhole activities. So all of those are major issues that happen here in the state of Florida. And that's why we have some of the larger companies like a State Farm and Allstate and Nationwide no longer writing homeowner policies, or they are very limited in their capacity to write. But like I said, we have found markets, we have found A-rated markets, which are straight standard companies admitted here by the state of Florida. So there are opportunities out there. It's not only the State Farms, the All States, and the nationwide. They might be companies that you haven't heard of, but they are companies that have been doing business here typically since 2000, 2005.
Yeah, I mean, most people want to go by, you know, who they see on television, when you as the professional will be able to assure that client that, based on your needs, this insurer would probably be your best bet.
Correct. It's like I said,
Um, it-
we have all of these carriers, and we're trying to provide the client with at least two options. So it's not just pigeonholed into one area. Now the client can make an educated decision, because the best premium might be the best price and it might be the best coverage, but there are times that it's not the best situation for you because of the carrier that's offering that.
okay, so with all that being said, I wanted to introduce the 10 things that homeowners should be aware of, that underwriters would be looking at in determining what the premium would be. So the first thing that's on your list is age of the property. Can you tell us about that?
Definitely. Insurance companies like things that are newer. So when they like things that are newer, they're going to give a better premium for those areas. Here in the state of Florida in 2002, that was the latest building code that was put into effect. So if you have a house that's built 2002 or newer, you're going to tend to get a better premium on that policy than you would, say, a house built in 1990. Once you start getting into the older houses built in the 70s, 60s, and 50s, they're starting to say, there's some wear and tear here. It's going to be a little bit more susceptible to having things going wrong with wiring in the walls that haven't been touched for 40, 50 years, plumbing in the walls that haven't been touched for 40 or 50 years. So those are all types of situations that just the age of the property itself is a major situation. So 2002, newest building codes in the state of Florida, gets the best premium typically for homes.
Now, when you talk about the age of the property, you did touch on, and I want to save the pipes for what I'm going to say. But talk about the age and the shape of the roof and the aluminum wiring in a house when you talk about older homes.
Okay. In terms of older homes, here in Florida, roofs typically last about 50 to 75% of the manufacturer's anticipated life expectancy of that shingle roof. For example, if you have a 20-year shingle on your home, typically here in Florida, it's going to last somewhere between 10 and 15 years because of the weather, the heat, the cold, the cooling down because of the rain, and of course windstorms. So,
and that's so true, Santi, because I just had mine replaced I've been at my house 17 years, and I thought, when my husband says, I think we need a new roof, I was like, no, it's 20 years. But come to find out, it was a goner. I had to replace it at 17 years.
All the elements here that we have, the heat of the summer, then the afternoon cooling of the rain, that's an expansion and contraction, and that expansion and contraction of the shingles breaks down the shingle life. So that's where you could have an older home, but you've had a roof installed after 2002. That's the newest building codes. What we suggest to our clients is to get what's called a wind mitigation inspection. The wind mitigation inspection basically makes sure that the roof was installed after 2002 with permits. You get a credit on your insurance policy for that. Then it gives you another credit for the thickness of the roof decking, which is all, by the installer, by the builder of the home, not by the installer of the roof. And then the tie down method of the trusses to the tie beams in the home. And then on top of that, they also have underlayment discounts. They have, if you have shutters on every opening, window, door, garage door, you get another discount. Now, all these discounts are given different values with different insurance companies for the same exact result of that wind mitigation inspection report. What one company might turn around and say, okay, we're going to give you $100 a year discount. Another company could turn around and say it's going to be $250. So that's where we turn around and say, with our 15 carriers, let's still shop it around and see if this is going to be a better situation for you here, or let's just apply it to your new policy here. So wind mitigation inspections for any roof that's been installed after 2002 is huge. A roof that's installed prior to 2002 still has the opportunity to secure a wind mitigation credit. The only discount that they cannot get is going to be the final, it's called Florida Builders Code, which is installed after 2002. But you can still get a discount if your roof was installed prior to 2002 on an older home. So anytime that you get a new roof, or if you're in doubt and you want to try to see if you can get a discount, most wind mitigation inspection companies will charge you anywhere from $75 to $100 here in the Central Florida area. I know down in South Florida, they charge $150 for the same report. But just know that this report provides you discounts on your current or future insurance policies, and the discounts stay on there year after year as long as you stay with the same company. If you decide in 2 years that you want to move to another insurance company, this report is good for up to 5 years. So you won't have to get another inspection completed. You'd have this report, you'd be able to utilize this report with the next insurance company you went to, as long as it was within the 5-year period. But if you stay with your current insurance company, it stays on there year after year. I've had it on mine since 2007. Only one time did I have to get that inspection report, and I'm happy to say on my house, I'm getting about a $225 annual discount since 2007.
Wow. Okay. Okay. So we talked about the age of the property, the age, and you also have on your list shape of the roof. Shape
Yeah,
of the roof.
we're talking about geometric shape. And again, the geometric shape has to do with the wind mitigation portion as well. Um, Geometric shape is, you have basically a handful of styles of roof. You have a flat roof, which is not very prevalent here in Florida because of all the rains and everything. But there are some older homes that have a flat roof that have a very, very slight pitch. And they usually call those a built up or a torch down roof. The next type of roof that you typically have is called a gabled roof. And that's where, if you're standing there looking at the front elevation of the home, and let's just say the section of roof that's over the garage is peaked upward like an A frame, like an A, that is called a gabled end. And basically, that gives you almost like a 90-degree extension of the concrete block wall up to the roof line. That's called a gable style roof. Then the more preferred roof for insurance purposes is called a hip roof. And the hip roof, if you're standing at that same elevation and looking at that garage section of roof, it's almost shaped like a pyramid. It's kind of laid back almost like at a 45-degree angle, and it kind of forms a triangle there, but it's not 90 degrees parallel to the exterior wall. The reason that the insurance companies like these types of roof is because, being that it lays back at like a 45-degree angle, more or less, if a heavy windstorm comes along, it's more of a glancing blow as opposed to a gable roof, which is directly 90-degree parallel to the ground there, which is more susceptible to having that section blown in and thus causing damage to the inside of the home. Now, you do not have to have a wind mitigation inspection completed to have a hip roof discount added. What you do have to have is that no other roof portion of the roof can be more than 10% other than a hip shaped roof. So if that one section over the garage has a gable roof, but the remainder of your home is hip roof, and that section over the garage is only 10% of the entire perimeter of the roof line, you would qualify for a hip roof, and you wouldn't even have to get a wind mitigation credit. But that would only give you the one credit, as opposed to the possibility of the length of the nails, the thickness of the nails, the spacing of the nails, the thickness of the wood. There's a lot of variables that go into that wind mitigation.
Okay. Yeah, that's good to know. Okay, now let's talk about the aluminum wiring in a house.
Aluminum
What is that?
Wiring, that was wiring that was used primarily here in Florida back in the 70s and a little bit into the 80s. They were trying to get away from the cost of copper, that it got so expensive. They said, let's look for an alternative. Well, they were coming up with aluminum wiring, and they started building homes and using this aluminum wiring to wire the home's electrical system. It was working fine, but then they started finding out houses were catching on fire. And they started finding out that this was arcing. The aluminum wiring was causing arcing wherever there was a joint. So a joint being that, the aluminum wire connects to an outlet, to a switch, to a fixture. And at that point, you get an arcing, and that arc causing a spark, that spark causing a fire. So insurance companies don't like to see aluminum wiring. But like I said, those are primarily in homes built in the 70s, a couple in the early 80s. But that's one thing that we try to stay away from. Now, some insurance companies are coming back and allowing a repair as opposed to rewiring the entire home, which could be rather expensive. They are allowing what's called Alumicon repairs. That's where this is a little section that basically acts as a break. It joins the aluminum wiring into this, let's call it a joint. And at that point, that joint then connects into the outlet, thus breaking up that arcing opportunity. Some companies are acknowledging that, yes, this is working. We will accept it. Some companies are still saying, no, even with that repair, you have aluminum wiring. We don't want it here, which goes back to my 15 companies saying, 7 or 8 of them say, no, thank you. I still have 7 or 8 to take a look at for my clients.
So let's say if I had a client and they loved this home, it was built in the 70s and it had aluminum wiring. I mean, what advice would you give me to give to my client, if it's in an inspection stage?
Well, at that point, I would tell you that we've cut down our opportunities to insure that home, probably by 50%. We could probably still insure it, but more than likely it's going to cost more to insure that home. The next thing I would tell your client is for you to tell your client would be, would they be up to A, rewiring the entire home, which could be rather costly. B, would they be up for attempting to do a repair with those Alumicons? And then the other thing I would tell you is see if you could go back to your seller and see if they would share in some of this cost. But we would have opportunities. We would just be a little bit more limited than a house that does not have the aluminum wire.
Okay. Well, I wanted to remind you about the story that I had with a client who found the house that they loved. I mean, this house was in immaculate condition. It was like a model home. It was built in the 80s, I believe, like 86 or 87. And we put an offer in the house, and somebody else got the offer, and my client was just crushed. And so lo and behold, 3 days later, the agent called me back and he said, hey, the home is back on the market if your client wants to put in another offer. And I was like, oh, cool. That'll be nice. So before I called the client, I looked at the MLS, which showed that he had changed, or I should say updated the MLS description, and it said that the home had polybutylene pipes. And I said, what are polybutylene pipes? And so I went on the internet and I looked it up, and I saw that it had all this history about, what polybutylene is and what it could do and this and that and the other. And so I actually got an inspector to go in there, and they confirmed that it was polybutylene pipes. And the client says, no, 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 I know the risk, but I love this house. I want to get it. Long story short, they lost that second bid. And I think a few weeks after, I talked to you, and I realized that although my client was crushed, they wound up finding a house that they loved anyway. But after I talked to you, I realized that it's a good thing they didn't get the house, because you want to share with me about, even if the house had polybutylene, how it could affect the client getting insurance on that home. If you could just talk about what is polybutylene, what the history of it is, and how you can get insurance on your home if you have polybutylene.
Sure. Most homes were piped with copper pipes when they were built. And what was happening is the interaction of the harshness of the water here in Florida was corroding those pipes, causing leaks into homes. So most people will take one leak, two leaks, and they'll go, okay, I'm okay. By the third leak, a plumber is typically telling them, it's time to replumb your house. And when they replumb it, they don't go back with they don't go back with copper. They're going back with CVPVC. It's basically a white plastic piping, and a lot of times they run that up through the attic or under the crawl space, whatever's available, whatever type of construction method they have for the home. Well, what was happening is, again, builders looking for something less expensive than the CPVC, they came up with this polybutylene piping. And the difference between that is polybutylene is a gray pipe and CPVC is a white pipe. That's the easiest way to distinct the two. Well, the gray piping, back in the 80s, they were getting installed quite prevalent throughout the whole area. And what was happening is these pipes were failing at the joint areas. So the joints were coming apart, and now you have pressurized water flowing through your attic, and basically causing your ceiling to collapse and water coming in on top of everything that you own inside there. So they came along and had a class action lawsuit filed back in the early 90s. And ever since then, insurance companies have turned around and said, if your house has polybutylene piping, we will not insure the home because we don't want to buy a claim. So basically, if your house had polybutylene, you were out of luck. You had to repipe that home. Now, I have a few companies now that will say, okay, if this is a new purchase, we'll give you 30 days to go ahead and repipe the home. And if you don't show us proof of repiping within 30 days, we're going to cancel your policy. But at least you were able to close on the property, but now can you get another insurance policy? There are some companies out there that will insure it, but it's very limited. So then the client's not getting the best premium. That's where we have issues. I typically would let the client know if they're purchasing a home, this is a possible issue here for us in terms of securing a policy to the best premium, and then also about the possible future problems with it. And that's where, again, if they're purchasing the home, I would say see if they could get the seller to help out in terms of the cost of the repipe. But that's basically the situation. Is it started with a class action lawsuit because of all the leaks, because of the failure at the fittings. So that's where the problem is. Personally, I believe that the plastic piping is actually better. The CPVC and the polybutylene piping are better than the copper piping, but builders are still utilizing the copper piping.
So, and I think you and I had a conversation where you were telling me that even if a client has purchased a house with polybutylene and is able to secure some insurance, the insurance company could say, yes, we'll give you the insurance, but we won't insure a catastrophe relating to a flood that's contributed by polybutylene pipes, which is horrible.
That is correct. And there's a lot of agents that will go ahead and just take the policy and say, we've got you a policy. The person loves this house, and they're sitting there saying, I just want this house plain and simple. And here, I've got a policy for you. And most people think, okay, I'm fully covered. And meantime, in that policy, it excludes water damage, any water related damage, not only due to the pipes, but a roof leak. So now this person unfortunately has a roof leak, and it says in their policy water damage is excluded. And they didn't realize it because they thought they had a policy that paid them, that covered them fully for everything that they had, but unfortunately it did not. There are other policies that will come along and only limit the amount of water damage to $10,000. Personally, for me and my agency, I tell any prospective client, if you want to write these types of policies that exclude water or limit water, we ask you to go find another insurance agency because we're not the agents for you.
And I'm going to get this question. If a house is affected by a bursting pipe due to polybutylene, would that be covered with flood insurance?
No, very good question. Most people will call in a claim and they'll say, I had a flood in my house. They've got water flowing through their house. Pipe breaking in your home does cause a flood of water and cause water damage. That is covered by your homeowner's insurance policy. Now, if you did not disclose that you had polybutylene piping to your insurance company, the insurance company sends out their adjuster. He reports you have polybutylene piping. At that point, they may choose to turn around and say, we're not going to honor this claim because this is material misrepresentation. You violated the contract, the spirit of the contract of this policy. We're not going to honor this claim. And on top of that, we're not going to renew your policy, or we're going to cancel your policy. That's the harshest portion. Flood insurance covers for water that's rising from the outside and coming in. So let's just say that you live off of a river and something caused that river to overflow. That water came into your house. That is where you would need flood insurance for. Those are two separate policies, two separate carriers, two separate entities altogether. So one is a pipe breaking inside your home, a roof leaking inside your home. You have coverage for that available through your homeowner's insurance policy. The water rising from outside and coming into your home, that would be a flood policy. And if you did not have a flood insurance policy, you do not have coverage for that situation.
Wow, and I think that's some good information for people to know, to be aware of, particularly when you are, buying one of the biggest assets, Okay, so we talked about the age of the property. We talked about the age and the shape of the roof. We talked about aluminum wiring. Federal Pacific box. Can you talk about that?
Surely. Federal Pacific is an electrical panel, and the electrical panel is basically your breaker box. That's where all the electrical in the home comes back to that main breaker panel, and that's where usually located in a laundry room or in the garage area. And you go over there and say, let me turn off the power to this one section. You go over there and flip the breaker, and it turns off the power to, say, your living room. That is your electrical panel box. Well, back in the 70s, they were looking for cheaper products to be able to build homes with, and they were putting in Federal Pacific manufactured panel boxes. And you would see, once you open up the electrical panel box, somewhere inside there, you'll see the name of the manufacturer of that box. Federal Pacific panel, again, utilize a lot of that same technology with the arcing of the aluminum wiring. Unfortunately, Federal Pacific panels is having arcing between breaker panels. So you would turn off this panel, but because of the arcing, it would not turn off that room from electricity. Some of these would overheat the circuit, causing a fire. So houses built in the 70s, a lot of them had the Federal Pacific panel boxes, and that's almost like a very, very difficult for us to get that insured. You probably cut that down to about 20% of our carriers
Wow.
that would be insured. The good thing is most panel boxes, to replace them with a new, updated, acceptable panel box, depending on the size of the home, I've seen it as low as $500 and as high as $1,200 to replace that Federal Pacific panel breaker box. So it's an easy fix, but unfortunately, it costs, but at least it's not a major cost like rewiring a house or replumbing a house.
Exactly. And again, maybe see if the seller could share the cost in it. What about the wood frame home versus a concrete block home? My home is 2-story, and I heard that if your home is half wood, half stucco, you're going to pay more. Is that true?
Well, it all depends. Okay. Typically, most houses here in Florida, due to the weather and due to termites, are most of them have the first floor as concrete block with a stucco finish. But you'll find some houses are wood frame on the first floor. Insurance companies look at that and they say, well, it's a little bit more susceptible to wind damage. That wood is not as strong as concrete in terms of standing up to hurricane type winds. However, due to the cost, most builders would build the first floor of a 2-story home with concrete block, and then the second floor, they would put a wood frame up there to reduce the cost of building that home, and then they put a skim coat, let's call it, of the stucco. So from the ground, you're looking at a house, it all looks stuccoed, and it may be concrete, but behind there, you'll typically see a seam that goes between the first floor and the second floor, and that lets you know that's an expansion joint. That lets you know that the second floor is definitely wood frame constructed. Now, here in Florida, again, insurance companies like concrete block homes, so they're going to go ahead and give you a better rate for that. And then we also have, through the insurance standards procedures, the insurance standard procedure says if the second floor is less than 33% of the entire square footage of the air conditioned living space, you could then receive a masonry rating or a concrete block rating for the entire structure, which gives you a better price. Now, some insurance companies have taken that 67% and taken it and lowered it as low as 51% and said, as long as you are 51% concrete block and 49% wood frame, we will still give you a masonry rating or a masonry veneer, which are both ratings that are better than just the wood frame rating. So that's one of the areas that, again, being that we have several different carriers, we could then take along and say, oh, here we go. We've got this client that has a 2-story home, wood frame. Okay, these carriers over here, they're going to consider it wood frame. We might as well not even bother here, but we're going to quote it anyway to make sure that our client has all 15. But we know more than likely it's going to be these 5 or 6 carriers that do not use the 67%, that they go down as low as 51% and giving you that masonry rate.
And I know you guys use a really neat input form that you give your realtors that we can find all that information out, particularly when we're supposed to be there with the inspector. We can get all that information, and that makes your job easier, and it helps to get the best available quote when you have all the information that you need to shop all those companies.
Definitely, because again, each company has a different guideline for what they're looking for. So our thing is we want as little surprises as possible when it comes time for your closing table. We want you to make that sale. We want you to get through that. We want to insure this client, but we want to insure this client properly. So we're looking all the way around. We just don't want you sitting at that closing table ready to close, and then somebody says, wait a minute, the insurance did not go through because you had XYZ issue here. That's why we have that little form. It might take, I think it's 10 or 15 questions, And
Yes.
there's a whole lot of information that, okay, company A, this didn't meet their criteria. Company B, C, and D, it did meet their criteria, and so on and so forth down the line. And now we can turn around and minimize those surprises for you and for us.
Exactly. Exactly. Okay. Homes in rural or urban areas, that affects insurance premiums as well?
It does. The reason is there's typically distance requirements to fire stations and to fire hydrants. So obviously, when you're in a subdivision or in a more urban area, you're going to have a fire station relatively close, typically within 5 miles, and you're going to have a fire hydrant close, typically within 1,000 feet of that home. So those two give you a better rate on your homeowner's insurance policy. But there are going to be rural type situations where you've got houses that sit on 5 acres of land, and thus the fire station is not as close as one that's in a subdivision. A fire hydrant is not as close as one that's in there. And God forbid a fire breaks out at that rural home, they have to find a fire department to get there quickly, and then they have to find a water source. And a lot of times you'll see them coming in there and throwing hoses in ponds or lakes because they don't have that fire hydrant close by. So they're doing whatever they can to put out that fire. So again, insurance companies look at it and say, if there's a fire hydrant within 1,000 feet and a fire station within 5 miles, a fire breaks out, chances are they'll be able to put this thing out before it becomes a total loss. But being out there in the country, those things are not
Yeah.
as readily available. It might take a little bit longer, and it might burn a little bit more. And now we have a possible total loss.
And that's really a consideration that, had it not been for the information that you give us, realtors, we wouldn't even really think about that, because you've got a beautiful home out in Wedgefield, say, for instance, and something happens, you gotta take all that into consideration, So
Without it, the good thing is Wedgefield does have that subdivision feel to it. So there are fire hydrants there within 1,000 feet because we have several clients in there. Chuliota, Geneva, those are more of those areas that don't have those types of situations. But let me tell you this: we have a friend of ours that lives down in Homestead, Florida, in a very rural environment there. He got together with his neighbors and they personally purchased a fire hydrant and had it installed on their block, and their insurance premiums were drastically reduced.
wow, I didn't even know you could do that. That's something to put in your library, right?
You just never know. You just never know. So, kudos to them for thinking about, hey, let's get together. Let's see if we can do this. And down in South Florida, insurance is very expensive compared to up here. So they were looking to do anything they could. And sure enough, yeah, they cost them money to have that fire hydrant installed, but they were able to recoup those dollars by reducing their annualized premium there.
Oh, wow, excellent. Okay, and you've already talked about wind mitigation, the importance of a wind mitigation inspection, number of claims that you've had in the past, that affects your insurance premiums as well?
Yes, it does. The reason is there are carriers that will turn around and say, okay, for new business, we want you to have a pristine claims background. No claims in 3 or 5 years. That's their rules. If you've had one claim, they sit there and say, sorry, we can't insure you for new business. There are companies that will say, we'll take one claim in 3 years, depending on the type of claim. Some will say, we'll take one claim in 5 years. Some will say, okay, we'll take 2 claims in 5 years. So again, this is where we have that independent status, and we're able to shop it through these carriers because you didn't.
Now, how will insurance companies know, though, if you've had a claim? Do they keep a database or something?
There's a database system that's called Clue. And basically, if a claim has ever been filed, that comes up on that system. So if you called your insurance company and said, "Hey, I had a pipe break in my home," you could tell me, "Nope, I've never had a claim." We go through the entire insurance process, and 2 days later, the company comes back and says, "We ran the clue, and yeah, they've had two claims. Sorry, they don't qualify for us." So at that point, they will cancel whatever application has been sent in there, and now we're scrambling before you're closing to get you insurance there. So
Now, let me
definitely.
ask you this, because a lot of people would say, well, hey, that's what insurance is for. Why would you penalize me for having a claim when that's why I have insurance? That reminds me of that Allstate commercial.
Well, you know what? The thing is insurance companies are a business. They want to make money, and they do because they are who they are. But they're going to turn around and sit there and say, "You've had a claim. You are an existing client. You're okay. You're staying with us. No problem. We will continue to go." We're talking about new business. And new business,
Oh,
they come
okay.
decided we don't want to take on somebody else's hazards, somebody else's problems. But more than that, statistically speaking, most people have a very difficult time filing that first claim. Either they don't know it's a possibility to be covered, or they just don't even think about their insurance policies. But statistically speaking, once that first claim has been entered, the second one comes much quicker, and the third one even quicker yet. So insurance companies start seeing a pattern that, here we've had a claim. Uh, Number two and number three is going to be pretty close right behind. Do we want to take this on as a new client? As an existing client, you're inside there until that company decides we've decided we don't want to insure this house any longer. We're going to non-renew your policy coming up for this next year's premium, and they give you 180 days notice to let you go ahead and take a look for another policy. Now you're back into that realm of this is not a new home for us, but now I got to get a new policy, so I have to meet the criteria of the new insurance company.
Wow. Now talk about the dog. If you have a dog, I mean, I think I was really surprised to see uh, that insurance companies will consider whether or not you have a dog, and if you do have a dog, that they want to know what type of dog you have, or
Correct.
or is it just dogs or animals in general?
No, it's primarily dogs or any non-domesticated animal. But primarily it's dogs. And most insurance companies will have a list of ineligible dogs. These dogs are typically attack type dogs, a history of attacks. Um, Rottweilers, pit bulls, German shepherds, those types of dogs there, they could be on that list. Now, there are companies that will sit there and say, we can insure your home even if you have this dog. However, we will exclude any and all liability associated to this dog attacking somebody else. So now you have liability coverage on your homeowner's policy. However, the insurance company says we'll cover it, but we're not going to cover anything related to your dog biting somebody else. There are companies that will just sit there and say, sorry, you are not eligible for a policy because you have this pit bull. So, again, this is where having multiple insurance companies available, if you have a pit bull per se, I could turn around and say, I can't put you over here, but I do have some opportunities over there.
So now, as realtors, are we obligated to ask them if they have any other animals, or just stick with dog? What kind of do you say? What kind of animals do you have? Because what if you have snakes in your house? And people do have pet snakes.
Yes, you are right. Typically, I have not seen anything that's been listed as, anything other than animals. But I did have a very odd situation. We insured this one gentleman here in Winter Park, and he had a pet goat. And the
Oh,
question
I
was,
want to go.
do you have any dogs? And he answered truthfully, no. Well, the inspector went by his house to take a look at the house, from an exterior inspection, and saw this goat in the yard. The insurance company came back and said, we don't want to insure this house because of this goat. And we had to find him a new policy. It wasn't part of the application. It wasn't a question on the application, but that opened my eyes and taught me to ask if there's any animals on the property. And then at that point, we could deal with the underwriters. But typically, it's dogs.
Okay, so let's say somebody has two pet snakes. So that's the same scenario then?
Well, what I would do is I would ask them what types of snakes and how large of a snake, and was there any history of bite with those snakes? And once I got those responses, I would go back to the underwriters of my carriers, and I would provide that information to them, and then that way the carrier knows up front, this is what this house has. It has these snakes, no bite history. They're boa constrictors. They've never hurt anybody. At least the underwriter knows, and he makes a note in there and says, yes, we'll take this policy on, even with these snakes, and we move forward. The underwriter may come back and say, yes, we'll take it, but we will not take it with we'll exclude liability regarding to the snake. Some others will just sit there and say, not a problem. We'll take it as is, but at least we've got it cleared. And now when that person goes to the closing table, there's no surprise regarding the insurance situation
there. Okay, so I just want to recap the 10 things that may affect your home insurance. And you did say plus or minus. I mean, because you could get credit for some things and then a higher cost. But those 10 things were age of property, age and the shape of the roof, aluminum wiring, the Federal Pacific box, the polybutylene pipes, wood frame versus a concrete block home, homes that are in rural areas as opposed to urban areas, the number of claims you've had in the past, the wind mitigation inspection, and the type of dog you have or animal. So now, is that part of your application? You say animals now?
That's correct. That's correct. I mean, we ask for dogs specifically, but then I also ask any non-domesticated animals.
And when you say non-domesticated, meaning?
Anything other than a dog or a cat.
That's good to know. That's good to know. So I think my take from everything is that when we're handling our clients, when we're looking out for our clients, they're getting ready to make this big purchase, not only do we make sure they get a good inspection, but we run that inspection report by you, and just make sure that everything's well-rounded and they've got all the information that they need to make a good decision. I think that it goes back to what you said before. You don't want the client to get in a situation where they get to the closing table, they don't have insurance, or they get to a situation where something's not going to be covered, or they're going to face this big premium, and that's not going to feel good for anybody.
That is correct. And we've had many of our prospective clients come along and sit there and say, gosh, nobody else asked me these 10 or 15 questions. Why are you asking these questions? And I tell them exactly that. We have 15 different insurance companies that we search for. They have different criterias in their underwriting guidelines. And we do not want you to be disappointed at the closing table and have to delay your closing or possibly go someplace else. We also advise them that once they forward that inspection report to us, we don't share that report with anybody unless they give us permission. We review that that inspection report, and if we see any possible issues, I raise that possible issue to that client. And at that point, they are now made aware of a possible issue there. And now they could turn around and say, well, let me handle this way or that way, or what would you suggest I do? But there are times that I'll sit there and say, you know what, this is not that bad of a situation. However, it could be a question. These are our two best options. How about if I share your report with these two underwriters that are our best options for you currently? Do I have your permission to do so? And then let's see exactly what they say. That way we don't have a surprise at that closing table. Or they turn around and say, you know what, I just don't want to share my report with anybody. And we say, no problem. We're going to hold on to this report. But ethically, I know that there's an issue there, and I would have a difficult time placing that policy there without advising the underwriters for the insurance companies.
Excellent, excellent. Well, what I want you to do is if you could just share how people can reach you, your phone number and your email and your website. I'm going to also put it in the chat box so that if anyone has any questions about what we discussed today, they can contact you directly.
Fantastic. We are here in Oviedo. We're at 800 Westwood Square, Suite C, Oviedo, Florida, 32765. If you know Oviedo, we're off of Loma and just north of Mitchell Hammock. We are next to Habanero's Mexican restaurant. My telephone number here at our office is 407-366-2763. And my email address is my name, Santi, SANTI, Gonzalez, GONZALEZINS, like insurance, at att.net.
Okay, and your website?
Our website is www.gonzalezinsurancegroup.com.
Okay, and I'm putting it in the chat box. Now, I want to say one more thing. You not only offer home insurance, you guys do other types of insurance. Can you briefly touch on that?
Definitely. What we also like to do is we represent 21 life insurance companies. And a lot of times people are buying their home their first time and they forget about life insurance. Most people nowadays are a two-income family, and God forbid that one of those incomes is no longer around. What do? You still got to make that mortgage payment. So what we say is, let us provide you a life insurance review, and at least let's cover the balance of that mortgage. So God forbid something would happen to one of you, at least you know that the mortgage would be taken care of, and now you're going to, hopefully make life easier on yourselves by being able to take care of that mortgage payment with that policy. A lot of folks will look at mortgage insurance. We say, well, with life insurance, as your balance goes down, your death benefit stays at the same that you've been paying for, as same thing with your monthly premium. So let's say you took out a $300,000 life insurance policy because you started off with a $300,000 loan and you paid that loan down to $200,000. Unfortunately, somebody passes away, you would get a $300,000 death benefit. You'd be able to pay off that mortgage balance with $200,000 and still have $100,000 left over for you to utilize as you need be. Mortgage insurance typically will only pay off the balance of the loan that is still on the books. So we look at life insurance as a way to protect your home and protect your future. And hopefully you never have to use it, but at the same time, if
right.
you do,
yeah.
And then with auto insurance, we look at it and say most times people that are first time buyers forget about their their automobile insurance also being tied into their home. Because here in Florida, if you are found at fault in an accident and you don't have enough liability insurance, they could turn around and say, okay, you're now responsible for the remaining balance of this, $40,000 or $50,000. Most of us don't have that money to just turn around and write a check. So the state of Florida then comes along and places a lien on your home. So before you could sell that home, you have to satisfy that lien. And at that point, what we say is it doesn't cost you that much more annually to change the coverage limits on your automobile insurance policy, which will in turn help to protect your asset of your home and protect yourself properly all the way around. You might have to pay a little bit more, but it's not as much as one might think. So That's why we look at it and we say, let's take a look at your home. Let's now take a look at your auto policy. And let's also take a look at your life insurance policy, because all three of these things can and are tied in together.
And I think everything you're saying is just so important. That's one of the main reasons why I wanted to do this interview with you today, because a lot of people are so in the dark about insurance policies until we need it, but that's one of the tools I'm going to use with my clients. I'm going to make them look at this video that's going to be part of their orientation, because that's so important. I mean, the name of the game is protecting your assets, your home, your family, things like that.
And the thing is we don't want to be overinsured and start paying too much every month in insurance premium and hoping that we never ever use them. We want to find that correct balance to make sure that we're paying the right amount of insurance, but also having the proper coverage. What we always say is, every time you're driving down the road, if you hit somebody, I say that you're carrying all your assets in the trunk of that car. That deck lid pops up. That person that you hit walks around the back of your car and he looks inside there and says, what do you have? Here's your bank account. Here's your savings account. Here's your house. Here's your rental property. I want some of that. Properly protecting yourself on your auto insurance policy helps protect those assets.
All right. Well, again, Santi, I want to thank you so much. And we'll be having more of these sessions. I guess our next session will be talking about life insurance, the importance. And I know that's a source of confusion. There's different types of life insurance out there, and people are really confused as to what they need and how much they should have. So, and I encourage everyone that's watching, if you have any questions, I've put all the information for Gonzalez Insurance Group in the chat. Please feel free to leave comments or questions, and please leave your feedback. If you have any questions of future sessions, just let us know and we'll make it happen. Okay? And
help and give any information that we possibly can.
Okay. Thanks again, Santi, and I'll call you right after this session. Okay?
Thank you, Valencia.
Have a good night, everybody.
Bye-bye.